was a week of learning from the past while looking to the future, when we were reminded of how we planted the seeds of our own downfall.
Unfortunately, it's hard not to overstate the impact of this cultural attitude. Property acquisition as a topic was almost a national obsession.
But credited with ultimately rescuing ourselves.
The real heroes in this recovery process are the Irish people and their representatives. It's clearly been a difficult journey with a lot of efforts, a lot of sacrifices, but unbelievable determination and cooperation.
And as the European Central Bank plotted a new course to rescue the Eurozone's tanking economy.
In March 2015, the Euro system will start to purchase euro-denominated investment-grade securities issued by euro area governments and agencies and European institutions in the securities market, in the secondary market.
The governor of our own central bank promised an imminent decision on his 20% mortgage deposit proposal.
The final decision will be taken on this in the coming days. I would say days rather than it's not longer than that. And I wouldn't like to anticipate that because I'm not the only decision maker. But I hope my views will actually prevail. I'm sure they will.
If Patrick Honohan's views do prevail, house buyers will see their deposit requirements double. It's a measure which has attracted much criticism, largely because of the impact it will have on first-time buyers.
People are really scared. You take a typical person on the average wage and they are facing increased rents, increased taxes, austerity budgets which make them less well off, and in that vista you're asking them to double the deposit that they're going to put down. You may as well just take away their dream entirely.
Those in favour of the 20% deposit requirement say it will prevent future reckless or imprudent bank lending, insurance against repeating the mistakes of the past. Those against argue it isn't necessary because the banking landscape has changed.
Banks, for a start, didn't have to stress test loans back then, and they do now. That law actually came in. So we're doing more responsible lending structurally via rules that came out from the central bank. They were also applying a lot of ways to increase the amount you could borrow, which they can't do now. So we're doing prudent lending. We should just keep doing prudent lending.
At this open house in North County Dublin yesterday afternoon, there was no shortage of prospective buyers.
This one here, Rob's Wall, we just launched there at Christmas time and we have taken 30 deposits over the space of 2 weeks.
So business has been brisk in terms of this?
Business has been very brisk, but in fairness, Malahide would be a fairly exclusive location. There wouldn't be a huge amount of new development in this area.
Last year saw increases in property prices around the country, particularly in Dublin. However, the predicted flurry of house sales over the last few months as a direct result of Governor Honohan's deposit proposals hasn't materialised. An indication many feel that property prices here are beginning to level off.
This four-bedroom house in this admittedly very high-end development in Malahide will set you back in excess of €630,000, which means that if Patrick Honohan goes ahead with his 20% deposit requirement, any prospective buyers will need to pay out in excess of €126,000. That money may or may not be a problem, but one thing is for sure, an end to the uncertainty will be very welcome.
To Christine Lagarde, Irish people are the heroes of the emerging recovery. Yet for the many here still battling with bills and struggling to get a foot on the property ladder, it feels like we are continuing to pay a horrific price years after the monumental crash.
Emer Lowe reporting there. And Matty McGrath, we read today in the Sunday Independent that it won't be 20% straight off when the central bank takes its long-awaited decision on Tuesday. It'll be 15% rising to the 20% over 5 years. Isn't that what independent regulation looks like? It might not be popular, but it's good for us.
We needed regulation. But we have to learn lessons from the past crisis, certainly. But when somebody in that clip said, you know, that we all went mad, we all bought houses, that's not true. And in the past as well, we had grandmothers and grandparents and parents who gave us a dig out for the deposit. That's too restrictive at this point in time, even 15%, because people just can't get that amount of money savings. They haven't it, or their parents haven't it. It's all been drained with trying to pay back the bills. And quite frankly, to see, as I said, Christine Lagarde there with her Grace Kelly handbag worth 7,000, I'm informed, to see that patronising speak there, that we were heroes. We're not heroes. The 1.4 million people that I'm talking about that are in forced deprivation and still are, and small business people, the parents who want to send their kids to college, the people trying to get on the first rung of the ladder, and social welfare carers, all those people. It's anathema to those people, that kind of talk. And
yeah,
it's fine
but playing
the
the violin, Matty, doesn't fix an economy. And that's what's going on here, that we're trying to prevent the mistakes of the past.